It's wall-to-wall Labor across mainland Australia with the coalition parties fighting for relevance. Good news in the housing market, and Twitter recasts how it verifies tweets, and it's going to cost you money. It's Monday, the 27th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Nice weekend.
Yeah, busy weekend. I was out on the book promo circuit. So visiting bookshops, signing books, giving a couple of little author talks, that kind of thing.
What's the response to your book been like thus far?
Oh, fantastic. Actually, I've had a run of really kind of good reviews and a nice review in the Herald, the Sydney Morning Herald and the Age over the weekend. And just kind of, it's actually going quite nicely.
Fantastic. Everyone, get out there and read it.
That's right. How to Be Remembered, it's called. It's available wherever you buy books. And did you have a good weekend, Sean?
I did. I had a great weekend. Thank you.
Did you spend most of the weekend excited about your interview that's coming up?
Yes.
After today's show.
Absolutely.
Rupert Blunden, real estate and equity market specialist and investment director at Jamison TTB. This is a really interesting chat.
It is. We talked about investing in property, but not how we normally think about it. We talked about investing in pubs. We talked about investing in storage units. We talked about investing in property, but just different property, not housing, not commercial, just different ways to think about property. Fascinating.
Yeah, it's a good one. It's coming up a little bit later on. The main story this morning, though, Sean, wow, what a weekend for politics. It's wall-to-wall Labor across the country from Canberra through every mainland state. Only the Jeremy Rockliff government, coalition government in Tasmania, is bucking the trend after Labor won the New South Wales state election over the weekend.
Yes, it was the same back in 2007 when Kevin Rudd was Prime Minister, but most commentators think this is much worse for the Conservatives, with the Liberal and National parties in Australia torn between shifting left or do they go further right. Very, very difficult position. First New South Wales election, Chris Minns is the new state premier after Labor won at least 47 states, enough to form a majority government. The Liberal National Party won 27, suffering a near 7% swing against them. Independents won 7, Greens 3, 9 are still too close to call. It was a bad election for One Nation, didn't make many inroads at all. Not unlike the federal election almost 12 months ago, the losses for the coalition came from the Liberal Party side, not the Nationals, which throws into question how the Libs can reclaim the big cities across the country. Issues like climate change, the voice referendum, defence at federal level, and the cost of living are battles that Labor is either winning or perhaps the coalition is losing in the mortgage belts. Labor is well and truly ahead in this country at the moment, and it's a real problem for the Conservative Party.
So what's that mean then long term, Sean? Is this situation kind of with Labor in power likely to last?
It does go in cycles, but there's not an election for quite a while that's going to change the situation. It's hard to see Mark McGowan in Western Australia or Peter Malinauskas in South Australia going anywhere. Both are very, very popular. Dan Andrews in Victoria won an election last year. He's still got another 3 years to go. Queensland Premier Anastasia Palaszczuk doesn't go to the polls until October next year. There's a real chance she could fall simply because she's been in power for so long, but that's still 18 months away. There are elections in the ACT and Northern Territory next year, but they're very unlikely to go Conservative. Off the top of my head, I think it's been 20 years since they haven't had either Labor or the Greens running those territories. So all in all, Labor is going to be the dominant party for a long, long time.
It's a very significant weekend in politics. And Sean, I know now that really with so much happening between then and now, Friday feels like it was a long time ago. But how did local markets finish up?
Well, the S&P ASX 200 closed the day down just a touch to 6,955 points. The big mover on the day was Block, which I'll tell you about shortly. Over the week, the bourse ended down just a touch. The banks were lower on Friday following a similar sell-off on Wall Street. National Australia Bank was down 2%. Commonwealth Bank was off nearly 1.5%, while ANZ and Westpac were also lower. Suncorp ended the day down more than 1%. The big miners did reasonably well, with Rio Tinto up 0.5%. The defensive stocks, CSL, Wesfarmers, Telstra, Woolies, Coles, all outperformed, while the gold miners did well also, with Newcrest finishing 1.8% higher.
And international markets, what's going on?
Well, global banking markets deteriorated further over the weekend, which is likely to hit the local lenders today. Hedge funds took aim at Deutsche Bank, pushing its share price down 8.5% over the weekend. At one point, it was down nearly 15%. Investors, or at least the hedge funds, are worried about its large portfolio of derivatives and its exposure to the US commercial real estate market. Of course, that follows the failure of Credit Suisse and the rescue package from UBS. That's on top of US authorities struggling to contain the fallout from the failure of Silicon Valley Bank and Signature Bank. So there is plenty going on with these major lenders in North America and Europe.
And Sean, this is on top of Friday's report from US short seller Hindenburg Research that alleges payments group Block, which you just mentioned before, last year bought Afterpay, has a secondary listing on the ASX, facilitated payments for criminal activity, including sex trafficking and drug dealing. They're pretty serious allegations.
They sure are. It's also allegedly allowed its users to defraud the US government's pandemic relief payments. The short seller's report alleges Block has also been overrun with scam accounts and fake users, meaning it overstates Cash App user numbers to the market and is circumventing US regulation to overcharge retailers using its Square terminals. All guns firing here. Now, Block has denied the allegations and has threatened to take legal action against Hindenburg. The company described the report as being factually inaccurate and misleading. It's really important to emphasise that the claims are untested and unproven. At least one analyst has come out and says the allegations are anecdotal rather than systemic. Another major investor has bought into Block after its share price tumbled, so we need to look at both sides of this. Hindenburg, of course, boosted its profile earlier this year with a scathing report on billionaire Gotham Adani's business empire. It conducted a 2-year investigation into Block and published it on its website and, ironically, distributed it via Twitter. Now, the chairman of Block is Jack Dorsey, who's also the co-founder of Twitter.
Yeah, it's a fascinating story, that one. And Sean, there's plenty going on to kick off the week. We'll be back in a moment with the rest of the day's business news. Sean, the national auction preliminary clearance rate hit 71% over the past 7 days, and the second busiest week of the year so far for auctions nationally and in both Melbourne and Sydney.
Yes, in Sydney, the clearance rate was nearly 72% despite the state election. Melbourne was even more impressive. The preliminary clearance rate was 73.5%. Now, the national rate is the best since mid-April last year. It is normal to have fairly strong clearance rates at this time of year. The market is cyclical, but some market watchers are saying it's actually a little bit beyond that. Obviously, we have the full impact of rate rises to come through, but just the fact that the Reserve Bank is talking about pausing seems to have given a bit of a boost to the housing market. So people who want house prices to stop falling should be enthused by the auction clearance rates over the weekend, Michael.
Victorian Premier Dan Andrews is heading to Beijing tonight, Sean, hoping to boost the number of Chinese students studying in Victoria.
Yes, it's all a bit cloak and dagger, this. Andrews did say that two-way trade between his state and China is worth $40 billion and China's Victoria's most significant trading partner. It's Andrews' 7th visit to China and his first since 2019. It's also the first visit to China by an Australian state or federal leader since the pandemic. Now, Victoria has about 42,000 Chinese students enrolled in higher education, but the Premier says he wants to increase that by up to 20,000 students. So he's off to Beijing tonight.
Surely that's fairly significant politically, right?
Yes.
Because, I mean, that is an Australian Premier heading to China, as you say, the first by any of our leaders since the pandemic. I would have thought that is kind of quite significant.
Yes. Now, remember, Daniel Andrews got into all sorts of strife. Remember, he signed up to Beijing's Belt and Road Initiative, which was a huge initiative. China was spending a lot of money throughout Asia. Victoria kind of took part in that. He then kind of took a few backward steps from that when the criticism came. Tonight's trip, what's interesting, as far as I'm aware, well, at least the last I heard last night, there's no media invited to go along. So it is a bit cloak and dagger. And as you say, it is quite significant because he is the first sitting leader to be visiting Beijing since we've had all the problems with them. So it'll be a good one to watch, Michael.
Yeah, well, look, it's got all the makings of a sleeper story, really, for the next weekend edition of Fear and Greed. So I'm taking notes now in the hope of putting forward a fairly competitive argument next Saturday.
Well, I have spoken to you since our last weekend edition, and you are still complaining about the judgment of our very illustrious partner, Adam Lang.
What I would just encourage listeners to do is go back and listen to the weekend edition from the weekend just gone, because it's very competitive between you and me, and make up your own minds whether you feel anybody in particular was wronged in that judgment.
Righto. Moving on.
Fine. Okay. It feels like you don't agree with me on this one, Sean, so we will move on. The British government, this is interesting, has added an extra 10% tax on Australian wine imports just days after passing the Australia-UK Free Trade Agreement.
Yes, it certainly doesn't seem in the right spirit of things, does it? Now, wine is taxed...
Hang on, was that deliberate?
Well, sort of, but I just had to keep going. It was that bad. Anyway, wine is taxed in the UK by alcohol content, so Australian wine attracts relatively hefty levies. In the recent British budget, the levy increased, and then there was another rise last week. So Australian exports to the UK will be taxed about 20% higher. Now, when the free trade agreement kicks in, import tariffs will fall between 6 and 9%. So obviously that 20% is more than that. So the increase is larger, and Australian wine in Britain will cost more. Britain is actually Australia's second largest wine export market at the moment, at least by value. So the impost will certainly hit growers hard.
It's 7 weeks, can you believe it, Sean, till the federal budget. I know that your calendar you're just crossing off every day just in anticipation. And Treasurer Jim Chalmers is promising to show restraint, even though the economy is slowing, against worsening global conditions and high interest rates.
Chalmers said elevated consumer prices are the primary challenge, while the budget faces intensifying and compounding spending pressures. He said the government is still working to find the best balance of near-term and longer-term priorities. Chalmers said there are 8 key areas for the budget. Get used to hearing this. Cost of living relief to households, fair enough. Investing in growth and productivity on the supply side. Funding national security priorities, aka the AUKUS deal, that one. Strengthening care and essential services in the economy. Breaking down barriers to full labour market participation for women. Targeting entrenched inequality. Maintaining funding for programs that were left without budget allocations by the previous government. I like that one because we're 12 months on, so I don't think you can actually use that one anymore. And finally, number 8, showing restraint in other areas to make the budget responsible. They're the 8 priorities. We're going to hear all about those non-stop for the next 7 weeks, Michael.
I hope that they do make them a little bit snappier than that, though. They are 8 very long kind of priorities. They need to kind of get it down to 2 or 3 words and maybe even make them rhyme.
I like that.
Yeah, I want to hear Jim Chalmers rap it in Parliament.
Oh, and he could, I reckon.
He looks like he's actually got a bit of that kind of funk.
Underneath him, underneath that tie and suit, there's a super funkster.
And you could have Albo up there on the decks, couldn't you? Because isn't he a DJ?
He would, yeah, he is. And I mean, wearing his South Sydney jersey, probably just doing the DJ thing as we got Treasurer rapping. This is awful to think about, Michael.
It is, and it's just like, it's also not very natural for us to be discussing it. Like, none of these terms are coming naturally to me. Like funky and decks are all just like, am I using these correctly?
Yeah, no idea. And I keep thinking of Peter Dutton trying to do a rap, and that's really putting me off.
Yeah, good point. All right. Tracking app Life 360, Sean, has reported a loss of $92 million last year, much worse than the previous year.
And that's on double the revenue. Now, Life 360 owns a location tracking app used by parents that has various subscription levels and can monitor everything from where your kids are to how fast they're driving. Its mission, it says, is to be a leader in locating people, pets, and things. But it's really had a hard time of it. The company pulled back its marketing spend and fired 14% of its staff in January in a cost-cutting plan slated to save around $15 million annually. It is a global company, mostly US, but it is listed here and it's just struggling a bit, I would say. Having said that, great app. Got to say, I use it.
Do you?
Yeah, I do. Although I feel bad because sometimes I'm tracking my children when I really think I shouldn't track them because they're old enough to look after themselves. And then I have a sneaky peek. You know, Saturday night, Michael, I got to be honest, one of my boys was out and, he's under the age of 18. He's 16 and I wanted to go to bed. I knew he was out I thought I was confident he could get himself home, but that Life 360 app just allows me to sneak a peek at where he is.
Look, I would do the same thing, but at the moment, Sean, it just sounds a little bit creepy when you say the words, just so I can sneak a peek. They're words that you should never say, because you will end up with a new nickname out of it.
Righto. Moving on.
Okay. One of the world's biggest tea companies, Dilmah Tea, Sean, I think we all remember the ads, has threatened to pull its products from Australian supermarket shelves unless the major retail chains agree to pay more for its handcrafted brands of Ceylon teas.
It's just an interesting little tale, this, about the supplier having had enough of the market power of the big retailers. Dilmah Chief Executive Dylan Fernando said the company had been losing money in Australia for more than a decade, and its market share continues to fall as it refuses to compromise its commitment to sustainability and ethical sourcing, according to a story in The Australian. Dilmah is Sri Lanka's biggest global brand. It's sold in over 100 different countries around the world, and it's among the top 10 tea brands globally. Mr. Fernando said Dilmah will pull out of mainstream retail and become a super premium brand if the retailers don't allow them to charge more.
Finally, a little bit of voyeurism for simple folk like you and me, Sean. We talked a bit about this late last week when we spoke to John Stensholt, but there's a lot more detail now and it's worth a closer look. The Australian has released the list, Australia's richest 250, and it includes 139 billionaires, 31 women, and the total wealth is just shy of $532 billion.
Now, it does sound like a lot of money. Did you know it's the equivalent of the wealth of the world's 2 richest people? So the 250 richest in Australia put all their money together. It's the same as LVMH's Bernard Arnault and Tesla's Elon Musk.
Oh, it's just, okay, that's wealth at a whole nother level, isn't it?
Yeah. Of course, Australia's richest person is iron ore magnate Gina Rinehart. She comes in at 65 on the global list provided by Bloomberg. Andrew Forrest is number 2 on the local list. He's the only other person from Australia to make the world's richest 100. The top 10 locally includes cardboard king Richard Pratt, Meriton property owner Harry Triguboff, Clive Palmer, Atlassian co-founders Mike Cannon-Brooks and Scott Farquhar, Glencore boss Ivan Glasenberg, and Canva founders Cliff Obrecht and Melanie Perkins.
All right, moving on to international news now, and Russian President Vladimir Putin says he will deploy tactical nuclear weapons in neighbour and ally Belarus.
And that puts nuclear weapons right on the European Union's doorstep. Putin said he would deploy depleted uranium ammunition if Kyiv received the controversial weaponry from the West. He added that the move to deploy tactical nuclear weapons to Belarus was nothing unusual, saying the United States has been doing it for decades. He says they've long placed their tactical nuclear weapons on the territory of their allies. Whatever the truth in all this, it is very worrying that the war is escalating, or at least the weaponry used in the war is escalating.
Yeah, it's a pretty concerning development. Finally, Sean, we mentioned this one at the top of the show. Twitter will begin removing legacy verified marks from user accounts next week as it works toward a model where only paid subscribers and members of approved organisations get the status.
Yeah, so the move to cut the blue tick verification begins next month and is one of the earliest policy changes from new owner Elon Musk. He's described the existing program as corrupt, that's his word. Now, Twitter has made the blue verification mark a major feature of its Twitter Blue subscription offering, i.e. you've got to pay to get it. Paying blue users keep the blue tick and get higher priority in replies and searches, according to the company. They also receive half the ads and are able to edit tweets. A little less democratic, dare I say.
Yeah, it does sound it, doesn't it? All right, up next is the Fear and Greed Daily interview with Rupert Blunden, real estate and equity market specialist and the investment director at Jamison TTB.
That's right, about investing in real estate, but not in housing or commercial real estate, alternate types of real estate like storage units and things like that.
And you've also got Fear and Greed the week ahead featuring Stephen Koukoulas, our resident economist, who is, as always, enthusiastic.
He is, as always, enthusiastic. His horse ran on the weekend, which he was very enthusiastic about as well. It came home midfield or so he's fairly happy about it, but he tells us where that's aiming for. None of this has anything to do with economics. We talk about interest rates and things like that, of course.
Yeah, absolutely. And Sean, I need to mention, we spoke last week about the introduction of a new, I suppose it's kind of like a status, isn't it, that we're awarding to people?
Yes.
And that status is MEA, MEA, the most enthusiastic advocate, which is the least kind of catchy name for something, but it's essentially just the listener who is spreading the word about Fear and Greed, the most enthusiastic advocate of the podcast.
Yes. Well, the funny thing is we came up with the MEA acronym. And in fact, I'd like to say I came up with it and you quite rightly said, really? That ain't going to fly. Well, I've had quite a few people get in touch with me since that came up and said, we want to be MEAs.
Yeah, there's only one way to become the new MEA, and that is to spread the word about Fear and Greed, and then let us know that you're spreading the word. And would like to quickly nominate somebody, a listener, a bloke by the name of Chris, who contacted us via Instagram and is telling everyone about Fear and Greed by the sounds of it. And he listens to both Fear and Greed and to our sister podcast, How Do They Afford That? Discovered us through the Apple podcast charts, and kind of one thing led to another. And now he listens every day. So g'day, Chris, and thank you very much for spreading the word.
Thank you, Chris. I'm with Michael on that one.
Excellent. All right, I think that pretty much wraps us up for today, Sean. Thank you very much.
Thank you, Michael.
It's Monday, the 27th of March, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.